Welcome back to the show. The Nasdaq 100, the S&P 500, and the absolute Sazul is what we're discussing here on the day. Now, everyone's talking about this type of crash that we're supposedly getting. I zoom in here and I look like this is a double top. This is a double top. All right, well, first of all, to have a double top, you'd have to break that type of neckline there. It hasn't happened just yet. So far, getting a little bit of a rejection. But there's like two things you need to be discussing right now. And a lot of them we've already talked about. But I'm going to tell you why. This is a personal opinion, my belief, the reason why I went to college for you all know. I think the market has a little bit more juice. And I'm going to tell you what happens typically. Typically, if we look at the numbers, we look at past cases, don't trust me, trust the numbers, do your own DD as always. Why I believe, this ain't done yet. This ain't done yet. But I need you to do two things before we do that. I need you to hit that like button, the thumbs up. If you're enjoying what you're getting out, if you're picking up what I'm putting down, and I need you to think about hitting that subscribe button. The only thing you need to know here is Monday through Friday, I wake up, I hit the charts, I hit the books, I hit the numbers. Now, I like to let my videos do the talking for me, so to judge me after the video. But every day you're gonna get videos and content from me, free of charge. Also, too, I do want to let you know the Twitter link is down below. Make sure you check us out. The newsletter, everything like that, that's all down below. The newsletter is coming out tomorrow, 10 a.m. Central. And I want to let you know, Christmas is not stopping this train, right? Pause. Okay, let's get into this. So when we look at what's happening, right, when we look at the behavior here on the market, had a really strong sell-off. Now, what I will say, for the time being, right, the important things to look at here is the factor that played into that sell-off on Wednesday was a lot of volume. Since then, if you remember what I talked about, I expected a low volume coming right back into the market. And again, that's what you got, low volume out of it. It's just declining. Makes logical sense, okay? Now, I still believe next week, this week coming up, after Christmas, it's still going to be a little bit slow in my opinion. It's probably still going to be slow. If we take a step back and we look at what happened Thanksgiving, we look at July 4th, we look at holiday weeks in general, they're typically the volume slows down. It's very important. We can all agree there. Okay. And I don't think it's going to pick up the last week of the year or the first week of the year. You're really looking for that second week of the year. Plus, I do believe the first week you could start seeing a little bit of it happening. But what's happening right now across the market is very interesting. Okay. Now, let's look at a few things first. The dollar. The dollar continually is breaking down. And if you don't know, the dollar is a great metric of risk on versus risk off. Risk off, meaning obviously you want to, keep the risk off the table, hold your dollars, your shekels tight, go to sleep, put them under your bed, right? Whatever you want to do with those, right? You don't want to have any risk there. But the dollar, when it goes down, is typically means it's a risk on environment. You don't want to keep your money in dollars because the dollar is losing value. You want to move that money to something that's going to gain value. So you take risk on, okay? So the dollar's been going down. And the dollar, we've basically been watching like two levels so far. 102.4, and this is a 4-hour chart. You can go to the daily chart if you want a better view here, right? So you got rejected, you broke below, rejected, pushed down, you're breaking below right now. You end the week below this, okay? You zoom out, you see where these levels come from. You can see boom and boom. Now you break here, and I'm now targeting around like 100.5 to like 100.7, like another dollar drop on the dollar. No pun intended. Now, next up, this is where things get really interesting, is you start to look at yields, okay? And again, yields, what I did say, okay? You wanted to see a close below 4%, okay? You didn't get it, okay? 4% is going to be a big level. You zoom out to 2022, 2023, and you get some answers, okay? So 2022 highs, we'll talk about that in a second. We said you break this, you're going to get a run. You got a run. You got a great run. You broke below it. You dropped quick. You dropped quicker than I expected, right? Now you're at the next level. This is your 4% level on the 30-year yield, okay? If you look at the whole basic year of 2023, holding below this, we continue to push up on the market. Clear, very clear. While yields, 30-year yields stay below 4%, you continue to get upside moves on the market. Once you broke back below, then held. When you broke back over it right here in July and in June, the market hit a little bit of a top and you pulled back. Go check the tape. Go look at the data. Now we come back in here. When you topped out here, it was a good time to start buying back in the market. Okay, so just give me education there. Now you're getting a little bit of a basing here. Now I will say, Just because you're basing doesn't mean means you're gonna rally back up or you have to drop back down. You're looking for that break of this level now. You want to see the break. I don't even know if you really need to see the retest. You just want to see the break and hold on like a daily or a 2-day time frame. That's all you want to see. You want to see a strong hold below 4% on yields. Now, why? Okay, the data so far giving you, for instance, since November, yields are 30-year mortgages, for instance, which is what is heavily being affected right now by what's happening with yields, with interest rates in general. 7.5% down to, I think it was yesterday or the day before, down to 6.7%. Almost a full point drop. Really wrap that in. 30-year mortgages dropped almost a full percent in about a month and a half's time. I mean, really wrap your head around that. Now, I'm not saying mortgages are going to go down to 3%. I'm not saying they're going to 4%. I'm not saying that. But when you're getting this type of volatility, it's clear as day that the market is liking us. It's clear as day. And when we look at the pent-up demand in home markets, the pent-up demand across the board for loans and spending, okay, again, for debt, even business debt, the real juicer there, it gets you excited, right? Because if this continues to happen, and just because you're dropped, and let's say hypothetically you based here, rates would continue to drop across the board just based on what's happening there. You don't get the full reaction on mortgage rates overnight based on this move. You're not going to get it. Okay, it's going to take time. Okay, that's important to consider. And then obviously the Fed talking about what's happening with rates and cutting sooner than they thought, inflation going better than expected, and then Friday you had your PCE, which came in much better than anticipated. For instance, you go back here to Twitter. We go back right here. You can see I posted it here on Twitter for you guys at like 7:30 in the morning. I don't know why I was up. Okay. PCE, core PCE, lower than expected. Core PCE index year over year, lower than expected. Regular PCE, lower. Everything. Great, fantastic overall news there. Exactly what you wanted to see. Now, again, you have to be able to disconnect yourself from the 1-day setting and the overall trend setting. So for all the naysayers, all the people out there like, okay, guys, this is the end. Whew, sorry, Adele, she hits me in that soft spot, right? Not in the head, right? Relax, okay? So again, you look here at the daily time frame. I'm just saying, hear me out. Does it look that bad? And you want to know what this line? You want to know what that white line is right there? It's the craziest thing. This is previous all-time highs from 2021. Yes, 2021, the market, it only went up, right? It was the year of the yow, right? Remember that? We were just like, stocks only go up. Buy. Hey, can I get 30 SPACs while I'm out at it, right? That's what that was. SPY. Now, SPY, and no, you did get it. I thought you held below. SPY. I have two levels. This is your all-time high, and then you're down here. This is another key level, which you were getting rejected at, and you mounted. You ended the week above it. You're getting exactly what you want. IWM was probably the best close across the board. You held above 200. You're trying to break out here. This is small and mid-cap names. The Russell, like, what are we talking about? Like, why are people freaking out? I'm like, the Dow, you're still turning at all-time highs. Congratulations. You win, market. You win. Okay. Now, I'm not making this video to say, everyone, this is what you need to do. You need to go mortgage, refinance, get all the money you can, put all the home equity down. We're going long in stocks. It's not what I'm saying. Okay. Do your own research. You need to, be responsible, take accountability. But I am telling you, as of right now, there is zero reason for me to look at this market in a bearish sense. Zero. Absolutely none. Okay. Now, I'm fine getting bearish. When we make a lower low. Just like back here, when we made a lower low, you had an opportunity to short and you pushed down to the 200 SMA. It made sense. But if we're making higher highs, we're pushing up, there's no reason to freak out here. If you break below 403, maybe I'll go short down into like hypothetically 395, 394. But there's no reason to even think about these things logically, right? There's no logic. There's no merit here, right? It's like if I woke up and it was sunny 30 days in a row. I was like, I looked at the sky, it was still sunny, and I was like, you know what? There's one cloud up there. It's gonna rain today, right? Would you be willing to bet money on that? That's kind of what you're doing at this point when you're trying to go short here. You're like, that cloud's one shade off, of white. It looks like a rain cloud today, boys. Right? Pause. Right? I didn't mean it that way. Relax. Okay. Again, that's my viewpoint here. It's not my here to push you long to make you do anything, but across the board, it is what it is. Now, again, I'm not going to go over equities today. If you want me to go over equity, this is what I want you to do. We want you to go over to Twitter, right? I haven't even started answering yet. I'm about to post this video right now, right? This guy, I don't know what you're doing. This is crazy. Okay. I post this chart request. I do this usually it's Friday or Saturday. I'm going to be going over any of the charts you guys ask about as long as you follow the rules. Again, link is down below. Also, too, Discord spots will be opening up January 1st. So, hey, Santa's got a brand new bag, boys. Only real ones know that line.